Good day and welcome to the September 16th edition of the Gold, Goats, and Guns Market Report. Tom Luongo. Good morning, patrons. I hope you're all having a great Sunday morning. So we've got a lot to talk about, and let's get right to it. All right. So when I talk about the coming dissolution of the EU or the coming crisis within the EU, I'm talking about the kinds of things that happened this week. We had 3 things happen this week, all of which are incredibly important. I've written about some of it, but I haven't written about all of it. Because we start with the Article 7 invocation proceedings against Hungary for refusing to take migrants. And Viktor Orban, the president of Hungary, stood up on the EU floor, the EU Parliament, and denounced all of them as blackmailers and saying, you know, there's no way we're going to take any more migrants. And it's interesting that I got a comment on one of my YouTubes, or I got an email from somebody this week who's, reminded me that, they went and visited Hungary recently, and they were in Budapest and said, it's not like Hungary hasn't already had to deal with a lot of these migrant issues in the first place. That's not nearly as, quote unquote, homogeneous as the European press wants to make it out. Orban is saying no more because Orban has already had to deal with more than Hungary should have to, in his opinion, in the first place, simply as a consequence of this. So understand that this is a big issue, and this issue is going to pull the European Union apart. It's sinking dangerously and very quickly into unbridled authoritarianism. We know the story. Merkel unilaterally decided that they were going to take in all these migrants at the behest of George Soros and the Open Society Foundation and the rest of the globalists of the Davos crowd. And Hungary stood up and said no. They put up a border wall. Interestingly enough, they put up a border wall 5 feet inside the actual border of Hungary so that they can actually deport. They can actually send all the migrants who make it in through the wall and then immediately deport them or immediately send them into detention in an indefinite waiting period 5 feet, on the other side of the wall. They're still in Hungary, so they haven't been quote unquote deported, so that then Soros can't turn around and open up the standard lawsuit for violating their human rights. This is why the EU is so apoplectic about Hungary's stance. See, in the United States, the border wall is right on the border, and so once they're in the country, then they can't be deported without a legal challenge, and that's what guys like Soros and Brock and the rest of the Clinton Foundation and the rest of them, that's what they spend their money on, clogging up the courts to keep these people here, even though they're clearly in violation of immigration policy. But it's all just legalese and legal wrangling. Orban got around that by moving the fence 5 feet inside Hungary's border, and then they just drop the people off outside the wall and say, well, you're still in Hungary, you haven't been deported. Piss off. Orban's my friggin' hero. That's unbelievably awesome, right? Because that's how you deal with this kind of problem, right? This is how you deal with this kind of attack against your national sovereignty. And so the EU's invocation of Article 7 here is starting the process of setting the battle lines for either a complete insurrection against the standing globalist majority in the European Parliament, led by Orban and Matteo Salvini of Italy and the rest of the Eurosceptics, in May of next year with the parliamentary elections, or they're going to try and strong-arm Poland into not vetoing Article 7 against Hungary to strip it of its voting rights, at which point Hungary's going to just say, oh, okay, that's it, we're out of the EU. And once that process starts, then it's just going to be Brexit all over again. But don't kid yourself for 1 second. Viktor Orban is not Theresa May. Viktor Orban doesn't want to stay in the EU. He doesn't give a crap. He will leave. And he will take Hungary with him, and he will take the rest of the Visegráds, and Salvini will make the case, especially if budget talks between Italy and Germany hit the expected wall so that it all looks exactly like a redux of Greece 2015, and Brexit talks. Salvini will do the same thing with Italy, because imagine a year and a half's worth, or imagine a year's worth of the same kind of wrangling we had during the Greek debt talks, where we have a guy like Salvini going back to Italy and saying, look, these people aren't listening to us. This is what we need to do, as opposed to having that feckless jackass Tsipras, roll over and play dead because they handed him $1 million condo. All right, that's what we're dealing with here. So whatever they offered him, they might have just offered to not kill his family. It doesn't matter. Okay, Salvini's not going to do that. He's not going to roll over here. All right. Neither is Orban. These guys are now pot committed, and that's why it's so important. Same way, talking about being pot committed, the United States neoconservatives are absolutely pot committed, and Israel and the Saudi Arabians are absolutely pot committed to keeping Syria as chaotic as possible for as long as possible. The problem with that is that they don't have a position to do so short of starting a nuclear war. And so there was a report the other night that that Syrian air defenses struck down an air attack and defended against an air attack by Israel. Apparently, it was probably just missile strikes from over the Golan Heights, and successfully defended against that as things try to hot up over there. The United States and Russia are both doubling down on naval presence in the Eastern Mediterranean. I'm still convinced that nothing is going to happen there, and that the longer this goes on without a false flag chemical weapons attack and without any kind of overt provocation, that we're going to see Idlib slowly but surely, block by block, street by street, town by town, taken back over. The Russians are already opening up humanitarian corridors to allow people to escape the firing zones. The United States is saying, don't do that. Are you freaking kidding me? It's so very obvious at this point that we are on the wrong side of this. And it's really bad optics for this to happen during the week of 9/11. It's just not good. You take that, you add to it that the Turkish President Erdogan is moving troops back into Idlib in order to also protect the jihadists. I think at a certain level, Erdogan is trying to figure out whose side he should be on. So by moving troops in, he can either shore up the Idlib Turkish border to keep the jihadists from crossing over into Turkey, or he can support the United States attack and stab the Russians in the back again. I just don't see that happening. I keep seeing a lot of this stuff coming out of the hyperbolic Russian alternative media about Erdogan betraying everybody. I just don't buy it. I think there's no way that Erdogan's going to make nice with the Americans at this point. Trump will grind him into the dirt before he ever allows. We want Erdogan removed from power in Turkey, so nothing he does here is going to extricate himself from that situation. Okay? It's not going to happen. I think that what Erdogan is doing here is a bit of a double bluff, but we'll see. I'm not quite sure what to make of what's going on with him, but it seems to me like a little bit of a double bluff. All right, to maybe get a little bit of relief on the Turkish lira in the short term. All right, and then the last thing to talk about is I'm going to go over the charts. It was kind of uneventful in Bitcoin this week, and actually that's what we wanted to see. It was interesting in gold, and we're going to talk about that right now. Okay, so it's a big fight going on for $1,200 in gold this week. Note this bar. What did we do? We violated both last week's low and high. So we were set up last week, if you remember, for a we had a high probability of a break of last week's low. Now, normally that would mean that there's a very low probability, around 15% chance, that we would not violate last week's high, because that's what when we're checking for breaks of previous lows and highs. What we're checking for is limiting the range of potential prices for that week. So when we see, for example, if you want to be short, right, gold, you see that you have like a 90% chance that you're going to break the previous low. What that means is you can go short at that break for as much as you want once the break occurs, because once the break occurs, you now have an 85% probability that the previous week's high is where you can set your stop, because there's an 85% chance that the price that week's never going to reach that high. Now, it doesn't matter if it's the weekly chart, the daily chart, the 1 hour chart, the monthly chart, the quarterly chart, the annual chart, whatever it is. That's why these breaks are so powerful, because they give you the opportunity to set your risk tolerance in a quantitative way. They give you the pot odds of what's going to happen in one direction or another. And then when that directional event occurs, you can then decide. You now have a numerical and probabilistic model for where it is you should accept pain and accept the loss. And then after that loss, and after that level is breached, like if you were for example, if you were to have gone short here on gold, you would have made a couple dollars on the low end because we only moved like $5 below the low. But then immediately on Thursday, and that trade would have been good until Thursday when gold immediately spiked higher and hit $1,213. And if you had set your stop at the previous week's high at around 1202 or 1203, you would have been out here, and you would have been out in the trade. You would have been off a loss on this distance, but at least you would have known. You could have also decided that you could have set your risk tolerance lower than that, right? You could have accepted a smaller loss, and that's your prerogative. But here you know that this is a low probability event, and that's why these breaks are so important. And it's also why engulfing bars like this, where you break both the previous high and the previous low, are also so indicative of something strange going on. Now, this week was options expiration, so I'm not surprised we saw a big spike on Thursday and then a washout on Friday, because I'm sure there were a lot of people positioned for $1,200 coming into the September options close. So, again, this is the way things are. What it's telling me is that gold is just not ready to go anywhere, and there's a big fight going on between bulls and bears based on what they're seeing in the political system, obviously, from Europe to the United States and everywhere else. I did not mention the other things that happened in the EU this week in my opening remarks. Cyprus is being threatened with Article 7 over assisting Russia in investigating Bill Browder. I've got an article on Gold, Goats, and Guns right now. I think you guys should read it. It's really important. And then as well, the new copyright law, which is absolutely designed from the ground up to create barriers to entry to new social media platforms and politicize free speech and it's just Orwellian in its scope, along with GDPR, the new General Data Protection Recovery Act, or whatever it is. That's causing tremendous havoc in investment across Europe, and like FATCA for the United States, it's really bad, and these guys don't understand what they're doing, and they're setting policy that's creating the whirlwind that we're expecting, and it's coming, it's right there in front of you. The political instability is going to reap a tremendous monetary and fiscal instability real soon now. All right, and as we've said before, the first thing to get to do well in the setup phase for this. So the setup phase for this major break is weak gold and strong stocks, right? And that's where we are. So on Wednesday, and you may have to review this, I went over the monthly chart for the S&P 500 and told you it just was a beautifully, it was just a beautiful chart. Now, there I also told you that it was important for this rally to continue to break the high of 29.16, which occurred, I think, right before the end of August. So, or the previous, that high needs to be broken, and so that we don't throw an inside bar, which tends to be the harbinger of reversals. So here we are this week. Last week we had a 1-bar reversal to the downside, and then this week we immediately reversed that reversal, negating it. So this is real volatility here. It's not, as far as like the range is concerned, it's not real volatility. We're only talking, this is all happening within 40 or 50 points, which is kind of normal volatility for the S&P 500. But what it is we had a break below, a gap fill here, and then a move back up. So now what we're staring at this week is a 97% chance of breaking last week's high. And then if we do that, there's a better than 2/3 chance that we're going to break the high from 2 weeks ago. You see how that sets up? And that's where we are. So if we get that break, that would be good. The probability of a reversal or breaking the previous low is very low. So you've got about 4-to-1 pot odds here that you're going to get a break higher, and then there's a 67% chance you're going to get a break above 29 29,1650, and if that occurs, you'll probably start to see some short covering and move up to 2650 or something like that. So there would be a trade here. This is a moment where there would be a very good short-term trade in the S&P 500, in my mind, just looking at the numbers right here. Okay, so this is how you can use these statistics and use them well. And a couple of people have asked me about where they can read about this stuff, and I put the links in previous issues of this. And it's the book that I actually ghost wrote for my friend Peter Pham called The Big Trade, Simple Solutions for Maximum Market Returns. You can get it on Amazon. It's, for a first book, it wasn't bad. But yeah, I was contracted by Peter back in 2012 to write that book for him. And then he and I worked together for a couple of years, and he's a very good trader over in Vietnam. I learned a lot from him. I learned a lot about this and how to read balance sheets and everything else. So it was a very good, apprenticeship, and it's really helped me to move on to the path that I'm on now. It really helped me in the years that I worked for Newsmax as well. All right, and then let's talk about Bitcoin. So I've been talking about this triple bottom that's been forming in Bitcoin now on the weekly chart for a couple of weeks, and we can see the three breakdowns right on the chart here. And this one was huge, and we created the real bottom, and then we got another one down, and we got another bottom here, and then we got that bottom after Goldman bombed the market for about 3 days. And we're still dealing with the emotional and psychological washout from that. But notice how each time this high, these lows are just a little bit higher. And that's a good sign. That's an accumulation sign here. And these, each of these breakdowns is getting smaller in their severity while it gets crushed, while Bitcoin gets crushed down into here. Now, triple bottoms are not great. Double bottoms are better than triple bottoms. Triple bottoms tend to be neutral signals, and that they eventually just kind of peter out, and then we get a decision whether we're going to go low or we're going to go high. At this point, the severity of these and this coiling pattern, where lower low and then a high and then a higher low and then a lower high and then a higher low and then a lower high, right? Maybe at 7,000. That's a coiling pattern. So right, coiling patterns tend to reverse, but we'll see. Okay, and I like the fact that we're not seeing even temporary violations of these previous lows. That's all really strong. So I don't know that the crypto market is ready psychologically to move forward yet. There's still a lot of extreme weakness in the sector. If there's coins that you like, what we have in our portfolio. If there's coins that you like that are trading at unbelievably low prices, now would be the time to start taking speculative bets on them. I think we've reached something close to max, ugly. And but these are all still very highly speculative bets. This whole sector is still very much in flux, and there's a lot going on, and a lot of really promising projects are going to cease to exist. And so it's going to be very interesting to watch it play out. And that's why I'm trying to be very conservative in which ones I look at and recommend to people, even though they've been horribly gutted just like everything else. One other thing to note about Bitcoin, remember I told you previously that as time goes along, I will be updating these volatility numbers up here, right? And they have dropped significantly as I've added in now another 4 or 5 weeks worth of data. You'll notice that the weekly range is now under $1,000, and the difference between closes and down less than is close to $500 as opposed to $600. Those numbers should start to tighten up very rapidly, especially if we're looking at this kind of coiling pattern going forward. If we get low volatility here for the next couple of weeks, we'll see these numbers tighten up by another 25 or 30%, and that would be interesting. And that will tell us, start to tell us that moves that previously we would just be, we would be inured to. We would be like, oh yeah, it's only $500 in Bitcoin. What's the big deal? Now all of a sudden $500 could be a big move, and that's what happens when volatility compresses and the supply of buyers and sellers starts to dry up, and everybody loses interest in the market. And that's actually what you want after a major psychological break like we had back in December. You actually want people to kind of walk away and not care, because that's when bargains can be made. Bargains can be found. All right, that's what I've got for this week. I hope you guys enjoyed it. If you have any questions, of course, leave comments below. If you have any particular charts or stocks or anything in your personal portfolios or whatever you'd like me to go over in one of these, I'm more than willing, more than happy to do so. Please take advantage of whatever expertise I have. It's available to you at all times. Don't forget, you can also, ping me on Slack and ask for a chart read on any particular stock anytime you want. Just ping me in one of the forums, and I'll be happy to do so. And I'll annotate a chart or two for you, and post it up there. All right, you guys have a great Sunday afternoon. My wife and I are going to see Jordan Peterson tonight up in Jacksonville. She's taking me. It's interesting how that's working out. So that should be fun. We haven't had a chance to get out and have a kind of date night or whatever for quite a long time. So I've got a lot of work to do between now and then. So I got to go. Talk to you guys later. Be good and keep your stick on the ice.